Good morning, ladies and gentlemen, and welcome to the show. Listen, glad to have you guys here on this Friday, the 12th of February, 2021. Thank you for tuning in. Now, I'm going to talk about a crash, stock market crash. I hear an awful lot of talk out there, people saying the stock market could fall by 80%, even 90%. Some of them say 60%, and that it's imminent, that we could have this anytime now. And they're partially correct. It's ready to fall. And if nobody supported it, if the Fed didn't come in to support it and everything, it would fall down 80, 90%, maybe even more, but the whole system would lock up because everything's all interconnected now. All these bubbles, these hyper bubbles. So, yeah, it can fall though. It can start the fall. And in fact, it's ready. It's ready to start falling. But are they going to let it go? This is the big question. This is a big $64 question. And I'm going to say no, they're not going to let it go any more than they did because we've seen this happen already. This has already happened before. It happened toward the start of this coronavirus thing. You remember when the stock market was falling like a stone? When it fell down to like 18,000 there? What did they do? $2.2 trillion stimulus package. And what happened to the stock market? Went back up again, on all that money. And they sent all those checks to everybody. Remember the $1,200 checks? Remember what happened to the stock market? If where it is now? Just a repeat of the whole thing all over again. Except this time be a little bit bigger even. If it happens, if we get a market collapse. And yeah, the stock market could fall off by about maybe 20%. That's when they're going to start doing what they need to do to get it to go back up again. And by the time it hits 25%, and then you'll see action. I ain't going to let anything roll over. They're not going to let the corporate bond market collapse. They're not going to let the real estate market collapse. They're not going to let any of these bubbles collapse. They're going to keep printing money. But, there's always a consequence for your actions. And because they're on this road where they have to keep printing and never-endingly printing, there's going to be a consequence. And I can see us paying the consequence in the later parts of 2022. It's called hyperinflation. But we take a while to get there. So you're going to see inflation heat up before we get there. Coming into this summer, next fall. And, that just means the velocity of money has been in the doldrums for a long time because of these liquidity traps. Even though they printed tremendous amounts of money, that money has mostly stayed within the upper echelons of the financial system in what's called liquidity traps. But, I could see a reversal of all these things as we start to move in, head toward the hyperinflation. As the velocity of money picks up because people don't want to keep it. And when the consensus starts to turn and this is all a confidence game. When confidence starts to get lost, and it's going to, then you're going to see the velocity of money pick up. And once that happens, it's going to be a snowball effect. So, you've got your choice right now. You're still a little bit ahead of the game. All of your friends and neighbors out there, what do they got for money? The US dollar in their bank account. Or in Britain, the Great British Pound in their bank account. Or go over to Japan, they got yens in their bank account. Most of the people. The majority. And yes, the majority now know about Bitcoin, but they're hesitant about it, and they're sitting on the sidelines and they're waiting to see what it's going to do. And they read negative news about it. Maybe the central bank said it's going to go to zero and you could lose all your money. And they're kind of waiting and seeing, taking a wait and see. Even though they see Tesla plopping his money down on the table. And then there's gold and silver out there. How many real true stackers are there really out there in your community? Probably very few. Most of the people haven't poured in yet to these alternative asset classes. So you're ahead of the game. When they pour in, they're going to pay significantly higher prices than you are. And this means that their dollars aren't going to go as far into buying these cells, and you're going to make the gains off of them when they pour in, if you're getting in ahead of them. You know, it's like when the dinner bell rings, Ma Kettle, you know, and she clangs the bell and all the kids are coming running in. The first kid to get in there, he gets the best helping. The last kid to get in there, he gets the scrapings from the bottom of the pan. Okay, guys, let's get in there and let's get our charts started. Let's open up the charts right here. Take a look. Silver price today, $27.15. It's up 20 cents. This is still amazingly cheap prices. But it's hard to get some. This tells you that we're still there. And you got to hold the physical, guys. Forget about anything else. Nothing else matters. You got to have it in your hands. Got to hold the physical when it comes to this. And try not to get into any fake silver. You know there's fake silver out there. And by gosh, it looks like the real thing. You know, and most of it comes from China, like everything else that's good that comes from China. Just kidding around. But I'm telling you, honestly, guys. Okay, $27.15 for silver. Gold, $18.20. Yeah, be very careful when you're buying silver. Never buy it from some guy down the alleyway who's going to offer you a deal. There's never any deals on silver, first off. If they're going to cut you 10% deal on silver, no, it's fake. It's fake. You know, you always have to pay full price and buy. And, you know, it's probably going to start to be some silver starting to trickle back into the market. You can buy again pretty soon. You're probably going to be able to buy again pretty soon. But make sure you get the real thing and buy from a qualified dealer, you know, and somebody who has a reputation at stake for not selling any fake. You don't want to get into any fake silver. And there's fake gold, too. Gold price is down $4.40 at 18.20.30. Okay, cryptocurrency today. We're looking at an industry of, let me refresh the page. It's at 1433 there. Refresh the page. 1444, so it's went up 10 billion since I refreshed the page. $47,000, $47,131 for Bitcoin. Ethereum's at 1787, and you thought it was high at 1400. It's up to 1787. We're looking at Cardano at 92 cents, and we're looking at XRP at 57 cents. You know, I called the bottom on XRP on my channel. I said the bottom would be 15 cents for the people on my channel, you know. And it was going down. It was heading toward 15 cents, and I was watching anxiously, and when it hit 17 cents, it turned. Didn't quite make it down to the bottom I called, you know. I thought it would go a little bit lower, but the people that bought in at 17 cents, you know, they did all right. So the people who's listening to my channel, a few of them might have bought in, you know, listening to my call on that, and they did all right now. It's 57 cents. Polkadot, 27.73, which is another coin that I recommended on my channel back when it was about $3 and I think it's $3.70, something like that. I recommended it on my channel. It's now $27.74. Litecoin, $184. I've always loved Litecoin. $184 for Litecoin. You know, I started recommending Litecoin back when it was $3.80. Did a big show on it. Pointed it out to everybody out there, you know. $3.80 Litecoin. Okay, Dow Jones Industrial Average today, 31,417. It's down 12 points, or 0.4%. Now let's take a look at crude oil, 58.44 for crude oil, and it's up 20 cents. Move index is going along sideways at 45.95. This is your credit markets. Bonds and rates today. Long end is rising. This is not insignificant. 4.5 basis points on the 20-year, 3.2 basis points on the 10-year, and 4 basis points on the 30-year. I'm going to tell you what, every time we get a day like today when the bond yields are rising, they cannot let these rates creep up too high. They have yield curve control in the background. It's probably ready to go. They're probably ready to implement it if they have to, because they cannot let these yields go too high on the long end of the yield curve. And they'll do what's called yield curve control. And once they start that, that'll be never ending, and that'll be the end for the gold and silver manipulation. I mean, that'll drive gold and silver to the moon and beyond if they do yield curve control. Because I'm telling you, it's already to the point right now where your bonds are yielding less than the cost of inflation per year. So it's a negative yielding bond. It means you're losing money buying them. Not only are you buying into a corporation, basically the United States is like a corporation that sold shares. They're defunct. They're in the red, and they can never get out of the red. They're a bankrupt corporation, and you're buying their bonds, which is like buying stock in a bankrupt corporation. And you're going to lose money on it, on the proposition. You're going to lose money every year because the price of inflation is higher than the yield on them suckers. Yeah, and then they do yield curve control and they bring it down even lower. It means they're buying them all themselves. That's going to be just rocket fuel for cryptos and gold and silver. US dollar index 90.56. It's going along kind of sideways. You know, the hyperinflation itself can send gold, silver, and cryptos to infinity. I mean, think of it this way, guys, okay? Say you got a gold coin, 1 ounce gold coin, and say the dollar is inflating at like 30% daily. That means tomorrow your dollar is going to be worth 30% less than it is today. And say your gold coin is going up even more than that daily. And some guy comes along and he wants to buy it for dollars. He's got a big wad full of cash. I'm going to buy your gold coin, you know. Well, you know tomorrow it's going to be worth 30% more than it's worth today. And you know his cash that he wants to give you for it is going to be worth 30% less tomorrow than it is today. Well, how do you figure a price for that? 30% one day, 30% the next day, and they're both going in different directions. You're not going to want to sell it to him because you're going to say, hey, well, you know, if I just wait a week, you'll have to give me twice as much for it. You're not going to want to sell it to him. You're going to want to hang on to it because it's infinity. How priced in those dollars, how high it can go. You know, because it's real value. And those dollars, what are they? That's fugazi. It's garbage from heaven. It's leaves falling off the trees. It's if you look at what hyperinflation can do, the Deutschmarks back in Germany during the German hyperinflation, they were sweeping them up off the street like leaves, and nobody wanted them. They're burning them in the stove. Nobody wanted them. They're garbage. This is why Ray Dalio said cash is trash. This is where we're going. And there's no stopping this train at this point. Because most all these institutions, the real estate market's too big to fail. That means they will not let it fail. It's not too big to fail. When they say something's too big to fail, it doesn't really mean it can't fail. It just means that the governments out there now at this point can't let it fail because everything else will fail. It's all linked in together now, guys. And they have to keep pumping it up. So does this mean we can't have a correction? Yes, we can have a correction. But if the correction starts to cut too deep, where it's going to cause a collateral failure of the system, they will step in and they will do whatever they have to with their printing press to support it. That's where we're at. So we're not going to get no big 80% drop in the stock markets, and we're not going to get everything collapsing and the deflation and your dollar being worth more. When they can print dollars to infinity, does that sound really true that your dollar is going to actually become worth more? Now, I know that happened during the Great Depression because we were still on a gold standard and they could only print as much dollars as they had gold. But now they disconnected it in 1971. They disconnected it. That doesn't function that way anymore. Now they can print as much as they want. No limits. And they're showing you which direction that they're going. They're going to print endlessly. It means hyperinflation. And it means that these other value things like you got your money in the stock market, for instance, right? Say you're making good dividends and everything. Oh, look at all the money I'm making. It's all this paper money. If a guy's got a stock market portfolio right now, and he's got like $1 million in a stock market portfolio on one hand, and on the other hand, he's got a handful of gold coins. Say he's got four uh, United States eagles. The eagle, I think, is a American gold coin. So you get 4 of them in his hand. And he's got this stock market portfolio that's worth $1 million right now. Well, he could buy a whole suitcase full of eagles with his stock market portfolio. But say he hangs in there, and say we go through this hyperinflation. On the other side of this hyperinflation, his whole stock market portfolio might be worth nada. Zip. Zilch. Zero. But those 4 eagles he had will still be worth something. Worth a lot. And ultimately, in the end, it's like, I used to have a stove, a big furnace. Okay? Explain it to you this way. I still got it, a big furnace in my shop. Huge. I mean, it's a huge furnace. It's 6 feet long inside. The firebox is 6 feet long, if you can imagine a furnace that big. So one evening in the winter years ago, I had a big fire going in there with scrap wood. All kinds of scrap wood in there, So the whole stove was full of scrap wood. I threw this old hammer that broke the head, snapped the head off of the handle. I threw it in there, handle and all. If I had tried to find that in there amongst all that wood that was in there, it would have been impossible to find it. It would have been like finding a needle in a haystack, that hammer, that night, But I waited until all that wood burned out. The next morning I went in there, and the cold ashes were on the floor, and I just swooped my hand in around inside there, and I felt the hammerhead right away. Because it was what survived. It was tangible. It survived through the fire. Because it was made of steel, the hammerhead. All of that wood just burn up, gone. This is what's going to happen in this monetary system out there. All of this paper money is just going to poof like the wood. And the gold and the silver is going to be what's going to last straight through as value. And so where do you want to be? You can be trapped in this. You can get trapped in this when this starts to accelerate at a certain point. So right now you're an early adopter. Hang on for dear life to whatever you got that's real. You got a little bit of something that's real and you can hold in your hand that's real value, real money, God's money. Get your hand around it tight and don't let go of it. Hang on to it. Because ultimately in the end, when all of this paper burns up, and it's going to, in a massive hyperinflation, all that's going to be left of real tangible value that's going to put food in your belly is what you can hang on to and hold in your hand. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. And don't forget to ring that notification bell. Bye-bye, guys.